Jobless claims came in this morning, definitely disappointing, and that's following yesterday's ADP report that was also disappointing. Of course, we have non-farm payrolls on Friday. Now the expectations are low for them. So where did our correction go? We started out with things in the red, and now it looks like the buyers came in and bought the dip once again. I'm here with Ben Willis from Albert Fried. So Ben, buy the dips is still holding.
Absolutely, and don't sell the rips, you'll get killed. I mean, it's phenomenal to watch this market move. But again, welcome to the safe haven of the world. The United States equity market, if for no other reason, seems to be the beneficiary of what the damage being done everywhere else in the world. So we sold off on our own economic data, but again, this appears to be European money wanting to find safe haven in the United States stock market at this point.
Well, I don't blame them. Is there any particular area that we're seeing more strength in? Because we had been seeing that in the defensive side, and the commodities are clearly, still weak and lagging.
Well, the commodities, but again, the commodity side, I believe the U.S. equity market is seeing the benefit of the money flows out of the commodity complex and going to work in equities. Very few commodities are trading on their pure fundamental supply and demand ratio. They're trading on currencies, they're trading on money flows. So, and that's, trying to explain away gold, why gold isn't going up. I think it's a function of money leaving the commodity complex and not necessarily the fear of something else. But as what we're seeing on our side of the equation is, again, the individual investor seems to be buying what they know, a smart move. They're buying the consumers. We're seeing some of the healthcare stocks moving. We're seeing those that are usually first movement towards the individual investor. The technology side is an interesting place to keep an eye on. Very dangerous, very volatile. We saw some heavy pressure in the last few days, but I think we're seeing institutional money trying to find the right place to enter in the technology side from when we look at our heat maps.
Another area that has been good were the home builders. Now, we saw a little bit of a pullback there, but they're still pretty far down from where they had been at one time.
Right, but again, that was a very high beta trade. That was a lot of risk capital that went to work when they threw the baby out with the bathwater. It turned out to be a great trade. Same thing with the money center banks, the financials. The question is what kind of momentum they can have going forward. And when you have unemployment not moving, those people that need to have a job to buy a house. So they've put on it from where they've come from. They put on a great show. The question for an investor now is, can they continue that momentum? And the stock prices are telling you they are a little tired.
All right, so it sounds like right now the momentum is still in the consumer durable.
The world economy, the glass is half full. The question is how quickly the glass will refill, and right now it's very slowly. And in Europe, it's not refilling. I mean, we're seeing negative readings. But, our own market right now continues. I just had a discussion with a technical analyst who's going to go uptown and do a whole presentation. He's wildly bullish. He thinks this market can go to 1,700 on the S&P. I would like to see a correction somewhere, but we're only getting 100-point drops in the Dow, and that's our correction. The next day, boom, off to the races again. It's not healthy, but we can't fight it.
All right, well, as you know, you cannot fight the tape. And as Ben's saying, when we do have these corrections, don't blink because they're over before you know it. And everybody keeps buying the dips, so we may get that move that he's talking about, that move upward. That's Ben Willis from Albert Fried. And I'm Debra Borchardt with TheStreet.